We were talking about Gujarat Gas. Oil marketing companies are actually back in the red as higher crude as well as a weaker rupee are pushing the marketing margins sharply into the negative territory. Now, analysts are putting in that perspective and saying that the losses on petrol and diesel sales are mounting again, and it's important to get that perspective. So let me go across to Somit real quickly, who joins us with all these details.
On intraday basis, we did see a sharp fall coming in the share prices for the oil marketing companies, that is HPCL, BPCL and IOCL. And this is largely because analysts are now saying that despite the rise in crude oil prices, the fall in OMCs have been very limited. And if current level, if you see, at the current crude price level, if you see, oil marketing companies are incurring a loss of nearly 20 rupees per litre on sale of every litre of petrol and diesel. This is the gross marketing margin number that analysts are talking about. That's a negative rupees 20. Now, this is largely because in the past few days we have seen a sudden surge in the crude oil prices, and we have also seen rupee depreciating, and both these factors have led marketing margins to the negative territory. Now, before the war, margins were at around 2 to 4 rupees per litre on the positive side, but now with the surge in crude oil prices and rupee depreciating, this has come down drastically for the oil marketing companies. However, the exact financial impact of this could not be ascertained at this moment, but the gross marketing margins have turned negative of rupees 20. On the positive side, the Singapore gross refining margin that has surged back to around $25 per barrel. This is after the Chinese news that has come in, and given the fact that there is less refined product available in the market. Singapore gross refining margin is the Asian benchmark for refining margin, that is standing at around $25 per barrel, and the Indian gross refining margin that is also trading around the $24 per barrel mark, and this is quite positive for Reliance Industries, Chennai Petro and MRPL as well.
Okay, Somit, thank you so much for getting us those details. Mr. Oklingam, I'll take a quick question with you on this one. OMCs versus all these oil exploration companies. What's the holistic view that you would like to give us considering the situation?
One is making profit, they should sell them.
Yeah.
My strong view is that oil price is going to crack in a big way in medium to long term. If you look at even China, the service economy share has gone up from 42% to 57%. So all over the world, service economy is growing. Oil intensity in economic growth is coming down. OPEC Plus is increasing the oil supply. Renewable energy has taken off in a big way in Europe and China and India. And so the moment you see some resolution to this ongoing war, oil price is going to fall badly. So therefore, I would be a seller of all these stocks now.